Okay, so let's bring in my colleague from our London studios, Juliana Olayinka, into the conversation. And we're starting from TSB Bank. And just wondering, good morning, Juliana. Just get this straight. I'm worried when banks start closing branches and they're doing a rehabilitation that costs hundreds of millions, whether in dollars or in pounds or in naira. So what is all this about with TSB? What's the problem with this lender?
Good morning, both. Well, TSB has been dubbed the totally shambolic bank by its customers this morning. They've announced that they plan to shut 1 in 6 of its branches. They've got over 500 branches across the UK, so that's about 86 stores which they plan to close next year. As soon as they announced that this morning, they faced a wave of scrutiny, and that's because TSB, even though it's one of the smaller banks in the UK, they have about 5 million customers. They've had a series of IT glitches over the past couple of years, and these IT glitches haven't just affected TSB, they've also affected larger banks, but TSB's ones seem to go on and on and on. Last year, April, their digital banking went down and about 2 million customers couldn't get online. Some customers couldn't get online for a couple of weeks. So even though they've planned to cut these stores, they're saying that they want to spend £120 million into trying to push droves of customers into digital banking, which of course is the way we've seen lots of banks are going. But regulators and observers are saying that TSB are far from ready to do that, especially because just last week, Friday, they also had a glitch and several of their customers were also left out. So even though they're trying to go the way banks seem to go, some people are saying, hold your horses, TSB, you're not ready just yet.
Very interesting scenario there for TSB. But again, if we stick with the financial services industry, Juliana, as soon as this came in and I put it out on Twitter, and some of our viewers were reacting and asking questions, try to break down the mini bonds mass marketing for us, which the head of the FCA says will not be allowed. Why is that so?
Well, there have been a series of scandals involving mini bonds here in the UK over the past couple of years, both. And most recently was the London Capital and Finance Group. Basically, mini bonds are loans that members of the public can lend to small companies, mainly retail companies, but these can be any companies, including construction firms, anybody really who wants to offer, part of their debt to the public. And we know that, especially here in the UK, you can have your money in the bank for a couple of years and it only accrues interest of about 2%. And what these mini bonds have been offering members of the public are really high returns of about 10, 15, sometimes even 20%. Of course, those high returns come with lots of high risk. And that's what the FCA, the Financial Conduct Authority, have been picking up on. They're really not happy with how some of these businesses are targeting and marketing their products towards members of the public. They don't think the public is savvy enough to understand the risk. Yes, there could be high return, but there's a lot of high risk. And when these risks happen, so for example, when these companies, fail, they don't have the funds or the authority because it's not regulated properly to compensate victims. So they've put a ban which will come into place in January 2020. That ban will be for a year while authorities and observers can really look at the industry and trying to create some more stringent regulation. So mini bonds will still be available, but mini bonds will only be available to high net worth individuals or, financial people who are a little bit more savvy. I mentioned the London Capital and Finance business. That collapsed at the beginning of this year. They were owing 14,000 customers over £293 million, and the Financial Conduct Authority couldn't do anything about it. A lot of government bodies had to bail these customers out. So it's, they're really trying to put a tight regulation on customers who, of course, want to do something a little bit more with their savings, but have to be careful of the risk.
Thank you, Juliana. I'm just putting this up here. I'm not sure if this is visible to you. I just put it there. This was something that I came up with in the years of Nigeria's banking sector consolidation, 2004, 2005, and it reads, beware of bond offerings.
Beware of burnt offerings, absolutely.
That's not just my way of beware. So that's just
I can't
just
see it, but just hearing it alone is enough.
Yeah, beware of burnt offerings. You could get burnt. I guess that's what the FCA in the UK just say, beware of burnt offerings. Finally, with you, thank you. This company prints money for central banks for all over the world. De La Rue, the world's leading money printing organization. Now, it looks like this company is running out of money. What's the problem with De La Rue? You have any idea why this is coming out in the news that De La Rue going concern is now a source of concern?
Well, De La Rue, they're in a lot of trouble. Their shares this morning plummeted 20%, which is a record high. Over the past couple of years, their shares have plummeted 80%. That just shows, just how much from glory that they've fallen. They do print money. Most notably, in the past couple of years, some of the major problems that De La Rue have had involve Britain. They lost the contract to print British passports. They lost it to France. They're also caught up in several scandals involving the South Sudanese government as well as the Venezuelan government. And today, this morning, they announced that they won't be able to pay out their dividend, and they've reported a 6-month loss of 12.1 million pre-tax. And if you compare it to this same period last year, they were in profit of £7.1 million. So it's not just those scandals that they've been involved in. Also, as well, as we've just spoken about, a lot of banks are moving to digital. A lot of people not using cash as much as they used to. And that's, of course, where they've made their name, where they've made their money. So, they've brought in a new chief executive officer. They brought somebody in October, as we've seen with a lot of these struggling companies. And he has promised that he's going to try and publish to shareholders, a list of what they're trying to do to save the company. But a lot of economists are saying, can De La Rue survive? It's not just the fact that people are moving away from hard cash to digital. They've also got their hands involved in a lot of dirty pies, which has really made people, question the reputation of the business. So not a good day. 20% down at early trading is not good at all.
Very interesting. Printing money does not ensure that you stay alive, even if you print money. That's what it means. Money's come to some end. Thank you so much, Juliana. Have a great day. And let's have a bit of a lunchtime together today. It's a big day at the Central Bank, 1:30 in the afternoon. I'll be back. Thank you, Juliana Lanyinka from our London studios. Let's wrap this up and get our opening calls for today for the fixed income markets. That's where a lot of analysts or others have been looking at what will the Central Bank decide today, be listening in for what is the direction that the monetary policy authorities will have for the yield curve. So let's ask Ajibola Ero-Phillips, who's the head of FX dealing at FBN Quest Merchant Bank. Is joining us from FMDQ Exchange Place in downtown Lagos to wrap up the show. Ajibola, good morning. Welcome to the show. This is your day.
Good morning, Boston. How are you?
Great. What's your take at FBN Quest on today's MPC Decisions Day?
No changes. It's the last MPC of the year. We think CBN is just going to maintain and let this wait out to the new year before they begin to do anything. And we don't expect that there will be any change. It's pretty much same of the same for this MPC.
Signaling would you be listening to? What signaling would you want to hear from the financial regulator as far as the fixed income and FX is concerned?
So we're paying close attention to the comments that come out from the MPC meeting. Most especially as it relates to inflation. As inflation is going up, what's the CBN thinking of doing? Considering that there's been a downward trend in yields in the market generally. What kind of protectionist views are they going to be taking in terms of trying to protect the inflation from going higher and in trying to curb exchange rates going higher as well? So we'll really be paying a lot of attention to all of that. And again, we've seen that the reserves have dropped a whole lot in the last 1 to 2 months with CBN intervening in the IID market, just because there's been a lot of exit, especially from FPIs. So we'll be paying close attention to some of those comments coming out in terms of FX and inflation as well.
Okay. Ajibola Ero-Phillips, let's leave it there for today. Let's come back tomorrow and the rest of the week to chew over the Monetary Policy Committee decisions. Thank you so much, Ajibola Ero-Phillips from FBN Quest Merchant Bank. from FMDQ, a lot of F in that. And finally, join us at 1:30. We have live coverage of the Central Bank Governor's Briefing, and our studio is open at 1:30 till 3 o'clock in the afternoon. Thank you very much for watching, everyone, and I'll see you at lunchtime, 1:30. Have a great day.